Okay, I have some chats, voice and so on. So be very careful that I have written on the chat that we are taking the 5-10 minutes for pause to wait others. And I just mute my microphone for that time. So if you can hear me, that's very good. So we have today we have our third session, and we will study about the measuring and reporting financial position. And as I remember, I have given you the homework on the trial balance, right? Based on the second session. So let's first study the session number 3. Then we will back to the homework. Okay. So you want first do a homework on trial balance. Okay, that's good. I just checked your homework. I received 1, 2, 3, 4, 5. So I received homework from the 5 students only. Actually, that is not so good because others haven't joined our my attention about the homework, and I don't know what to say. So let's see what we have. I just checked your homework and have to say that yeah, that work is not so bad, as you do understand what is trial balance, but most of you made mistakes on the amount that put on debit or credit side. So this is, as you remember, we do on the second session errors when we confuse where to put the amount on the debit side or on the credit side, right? So right now I'm going to share with you my answer, the solving problems for the homework, and let's see what we have actually. So just a moment. So going to share with you with the answers, with the right answers. So I have some questions. So okay, some. So yes, of course. For example, some of you says that you have a bad connection at the end of the session, and most of you didn't get the homework. But I do send homework. I did send on your emails, so you should receive it anyway. You must receive it because the VVS administration, they send me all students email that participate in the class. And the last time I have sent all presentation based on the second session, session number 3, and the homework also I did already send to all of you. So who didn't receive any information from me, please just write to my email. Just going to write my email, because maybe your email have missed from the students' mail list, or I don't know, something else. Maybe you have changed your mail address. So here is I'm typing my email address. So who did not receive any information from me, just send me a reply or test something and ask me information that you need for. Yes, Mr. Kais, I received your homework also. So let's back to the homework. So going to share with you with the information on the trial balance right now. So that's okay. The session number 2, we had the homework based on trial balance, right? So here is my answer is sending to the WebEx center. So right now we are going to see. Okay. So here is the transaction involving Edling Enterprise throughout the months of February 2001 are. So we have a few transactions that we have to show the ledger accounts and trial balance for the following. As you remember, I asked you to do a trial balance as it's most important. So let's see. Here is the right answers for the trial balance right here. So the first one, the February 1st, we have a purchase office supplies by cash 274. So the first one. So we have a purchase office supplies. That means it's our expenses. So we put it, look at here, we put it on the debit side. Office supplies, 274. Please check with your answers. So somebody cannot hear my answer clearly. I'm going to manage my microphone. Please let me know if you can hear me. Hello, hello. Can you hear me clearly? Please let me know. Yeah, fine, fine, good. So the first transaction, office supplies, we put on the debit side because that is our expenses. We have bought office supplies for 274 ringgit, means Malaysian ringgit or US dollars, it doesn't matter what kind of currency. And we put on the debit side because it's our assets, right? Okay, let's see the second transaction. Edling withdrew cash from business totaling 2,000 for personal use, right? So it's our drawings. Here is I have put in withdrew by Edling for personal. We put on the debit side because it's like seems like expenses. That is understandable. I think so. Yes, this is drawing that the Edling, who is the shareholder, he has taken the money from the business for personal use. And we are going to withdraw that money and put on debit side as the expenses for 2,000, right? So let's see the next transaction. The transaction number 3, February 5, received here is 2,740 cash from customer for payment on accounts receivable. So this is our accounts receivable. So we received a cash from our customers. So we put on the debit side as a cash. You see the cash accounts receivable we put on the debit side. So I'm just going to share with you with our last session, and you can like check with true answers. We have another examples on that one. So just give me 1 minute. Double entry trial balance here is. So this one. So you remember we had like as example the ring cyber service. Here you can see the like accounts receivable, this one. So we put on the debit side. So we have we received a cash. It's also like a cash. You remember? Let's back on the Kyber series trial balance. Cash also is on debit side. Is our assets like a cash, accounts receivables. So we put on the debit side because it's cash. We have received a cash on hand. That means we have a cash on hand, and that accounts receivable also puts on the debit side. So okay, that's fine. Is it fine for you? Have you understand this transaction number 3? We received the cash money in hand. So this is our assets. We always, when we our assets will increase, we put on the debit side, right? So let's. I have some questions. Let me finish this transaction. Then I will back to your questions. I will answer. Okay. So let's back. So we have February 9. Purchase office equipment valued at 4,000 on credit, and the seller agreed to give a discount for 150 from the amount, right? So this transaction we put like this. Office equipment. Usually we should put office equipment on the debit side. But here is, we have bought this equipment on credit. That means our liabilities has increased. If it's increased, liabilities increased, we put on the credit side 4,000. RM means Malaysian ringgit, if someone asking. RM, Malaysian ringgit. This is the currency in Malaysia. So, office equipment we usually put on the debit side, right? Because it's assets. But we have bought it on credit and our liability has increased. If our liability has increased, we put amount on the credit side for 4,000. And then we have do you remember we have discounts from seller. So discount receivable we put on the debit side. That means we are going to receive some discounts like as assets like cash, and we put on the debit side 115. Some of you just minus 4,000 minus 150 and put the difference on the credit side. But usually, you remember we have a principle, the host historically the historically host principle of the in the accounting, that we usually put the historical price, historical amount of the equipment on the any statements. So why we have put the 4,000, not like 380.50. 3,000, sorry, 3,080. We put the total amount, and we also showing the discounts in the debit side 115. So let's see the next transaction. Yes, I'm going to answer for your question at the end when I complete my transaction. Is it okay? February 15, we made the payment to accounts payable for 1,200. So accounts payable, here is accounts payable we put on the credit side. As always, this is our accounts payable that we have must we pay, we put on the credit side. Like it's our liabilities, 1,200 Malaysian ringgit. If you can see, here is on the Ring Kyber series accounts payable. We have a payable, right? Yes, we have payable, accounts payable also here in that sample. Has put in on the credit side. Always accounts payable we put on the credit side, that you must remember. This is like our liabilities, right? So let's see the next transaction there. We received a cash for services provided for 580. So we received a cash. You must remember that we received a cash for services provided. That means our revenue, right? So this is the Edlin Enterprise Company. We do understand like a service company. And right now we received a revenue from our businesses. So we call it service revenue and put it on the credit side. Because first is our revenue. Some of you put the revenue on the debit side. Why is not right, not correct? Yes, because you have confused with the words that received a cash. And you know that cash we always put on the debit side. When the cash increase, this is our asset, we put on the debit side. But this is a service revenue. Okay, we received on cash, but this service revenue, like a revenue, our capital will increase means. Yes, right? When we receive the revenue, that means our capital will increase. And as the capital, as the revenue, we put on the credit side and will increase in the credit side for 580 ringgit. So let's see the next transaction. We have paid 420 Malaysian ringgit to advertise its business in the newspaper. I think you can agree that is expenses, right? So here is we are looking, putting like advertising expenses, and as assets expenses we put on the debit side. So means our expenses has increased 420 ringgit. So let's see the next one. This is very interesting. This one, look at this transaction. So paid telephone bills, 75 for Edlin's house and 135 for business, and electricity bills 42 for Edlin house and 80 for business. All the payments had been made using money from his savings, means from the shareholder savings. So you have to remember. Do you remember the accounting principles, the business entity principles, where we say that the business budget would be separate from the personal budget, from the shareholders' personal budget, right? The family budget is separate from business budget. And here is, we have to take the amount for business only, that made for business only. That means 135 for business, telephone bills that paid, and the electricity bill that paid for business 80 ringgit only. 75 for Edlin's house were not taken, and the 42 for Edlin house, because this is the shareholders' personal expenses, like it's made from his family budget. And also this important thing, that all the payments made from the business side. So let's see what we did. So I have put in that like is utility expenses, right? The telephone bills and electricity. I have taken only 135 plus 80 because that amounts made for business. See? And put on credit side. Why is credit side? Actually, this is expenses, should be on the debit side, right? as expenses will increase, so we put on the debit side. But we put on the credit side because this amount has paid from the Adeline own savings, not from the business budget. And that means the company's company's liabilities will increase for 135 plus 80. This is liabilities has increased, and we put on the credit side. That means company must pay to Edlin his own budget this amount. Then when he would be paid, we put on the debit side. So I think this you do understand. So so I have a question that amount 75 and 42 is missing. No, this is not missing. Let's see. The 75, just wanna change a color. The 75 for Edlin, so this is expenses made for Edlin house, for his personal life, for his means from his personal Excel budget and for his personal use. And 42 same. It's a not business expenses. It's not related to business or to the company, to Edlin company. It relates on his family's budget. Why we won't take this amount in the trial balance? Because this is a personal expenses, not business expenses. You must remember, when you have business, you do some expenses on your family budget, right? And you do some expense on the business in the company. And the accounts must be separated always. Separate always the accounts and the budgets also. Remember these things. And why this is, okay, some are confused why we are not taking these amounts to our trial balance. Why we are not taking? We are not going to show anywhere, right? This amount specially given to you to confuse you, because this is the assignment, right? This is the review question. If you do right, understand what is a trial balance, you do like I have given the answers. And of course, here is some words are confused, especially given to students to confuse them and to push them to think what we should to do, where we should put this amount, should we put on trial balance or not, how we can do it. This is especially given to you for students to encourage you to think about accounting, to remind our last sessions about the accounting principles. So that I given the accounting principles and concepts are very important, and you must remind them always. And if you do remind, you do correctly your assignments. So, and let's see the next transaction. We have a paid 1,200 for rental of business premises. Just a moment. Oh, sorry. Paid for rental of business premises. This is our expenses, right? So this would be looking at like rental expenses, and we put on the debit side, because when our expense will increase, we put on the debit side. And another one, we have a last transaction is paid 220 Malaysian ringgit to repay the office equipment. So the repayment is also expenses, right? The repair expenses has increased. This is our assets, expenses, and we put on the debit side. right? So, and here is, we calculated the total amount from the debit side is 7,004 Malaysian ringgit. On the credit side, we have 5,995 Malaysian ringgit. So, the debit side, this is the 7,004, shows the business's expenses, the business assets that we have. And the credit side, that shows what company have its liabilities and capital. Here is the revenue, service revenue looks like a capital, right? And the other one, the office equipment on credit, the accounts payable, this is liabilities, company's liabilities, and utility expenses. So in the total, we have no any balance, right? We can see that the amount should be equal, the left side and the right side. If we have a no equal amount, we must take the balance carried down. We will taking the balance carried down. That means the big amount, the 7,004 minus 5,995 would be 1,009 Malaysian ringgit. So we are carried balance down for 1,009 Malaysian ringgit, and then we can see the balance. You see from the debit side we have a 7,004 Malaysian ringgit, and on the credit side 5,995 plus 1,009 would be 7,004. And so we have now we have an equal balance, right, from the left debit side with the right credit side. And of course we carry down the balance for 1,009, and we have it shown also. We must show it in our trial balance as balance brought down. So these amounts will be taken for the next month, for the March, for the next month. So now I'm going to answer for your questions. Who did not understand why we do like this, why we have solved the problems with these ways. So the question, where did we take in the carry down money? The carry down money, remember the last session, so we are going to back on the last session. You remember this one, these things, balancing of accounts. Stage 1, add amounts on debit and credit side. So you remember on the trial balance we add the amounts on the debit side and the credit side, right? Then the stage 2 takes the higher side to deduct the lower side to obtain the balance. So here is, which is the higher side? Of course, this is the debit, is a higher side, 7,004, right? And we deduct it from the lower side, 5,995. And then we will be taking the carry down. We will be taking the carry down balance for 1,900. You see, here is also same things. For example, this is like a debit side, we have 482. On the credit side, we have 158. And we deduct the higher side, 480, going to type you 482 minus 158. That means the higher side minus lower side, and the balance carried down would be 324, right? And we put in balance carried down for 324, and then it will be plus to this amount for 158, and then the balance would be equal with the credit side. You see, And stage 3, enter balance here so that totals will be equal, right? We have taken this amount, we plus it together, and now we are looks like our balance is equal. And stage 4, now enter totals level with each other. Here is total levels and this one total levels, right? And the stage 5, finally enter balance to start off entries for following months. And the following months we start with this amount, 324 Malaysian ringgit, which is the balance breakdown. And we did the same with our homework. You see, we did same. We have a debit on the debit side. We have a amount for 7,004, and the credit side we have less than this debit side, 5,995, and we deduct the higher side with the lower side, and we got the balance which is carried down. So then we plus it, this one, the 5,995 with the 1,009, and we have and we just solved our problems with the equal balance. And we are checking, and we can see that we can see the equal between the debit and credit side for 704. And of course, the balance brought down for 1,900. We won't forget about this amount because it will move for the next month. So, any questions? Hello, can you hear me? Because some of you can't hear me. So, what any questions about the homework? So you remember, yes? You know that office supplies purchased by cash, the rental, the repayment, all our expenses we put on the debit side. What else? About the utility bills we paid. Edlin's house won't take on the trial balance because the personal's budget. What else? So any question, service revenue for 580, we put like service revenue, we won't put on the credit side as a cash because it's our service revenue. So, and you must remember, when I give you some assignments and homeworks, especially like this, like trial balance, like a balance sheet, always you have some confusing things. Like here is we had like Edlin house, like expenses made by Edlin and so on. This is specially given to you to think more broadly about the accounting. So we solved this our homework, right? So I have a question. What is the difference between the receiving and withdrawing? So receiving means we have received money, right? So here is received cash, like example. And withdrawing, that the money has been taken from the accounts, like seems like expenses. The money taken from accounts, from business accounts, and we have withdrawing that money. So any questions? What? So this is I have some question. What is the debit on a credit? If you do carefully listen the last session, you must be remember what is the debit and credit side. So any questions? Just going to back on your questions. So remember always the credit side. When we have in the business we have liabilities. Liabilities means we must give to somebody a money, like our credits, loans, liabilities. We put on the credit side. And our capital, that the shareholders' capital, we put also on the credit side. This is a trial balance. And all our expenses that we made based on the business, of course, expenses made for business, expense, and the money we received, like a cash one, or we have a cash in hand, we put on the debit side, right? I have a question about the February 5. So the cash. Okay, let's back. We received 2,704 cash from customers for payment on accounts receivable. So the accounts receivable we put on the debit side. This is the cash. We received a cash money. Always when we receive a cash or we have cash in hand already, we put on the debit side because this is our assets. Logically, you must understand like assets is what is assets? Is our cash, is our supplies, is our equipment, right? What assets is our expenses also that we made for the business, like advertising, like rental expenses, like utility expenses. This is assets, all assets. And what is credit? On the credit side, we put our capital, means the business capital that the shareholders have invested to the business, how much they have put money on the business. We put on the credit side the capital. We put on the credit side our revenue that we received from our businesses, that we sold some products like sales. We made for some services like service revenue. We put on the credit side, and also we put our liabilities on the credit side. Liabilities means our credits that we have a credits, our loans we have or like what else? Like we have accounts payable that we must pay for somebody, like here in the February 15 accounts payable. This is also our liabilities. So I hope you do understand the trial balance and this homework. So any questions I have, what is liability? Just now I explained to you what is liability. Going to type you. If you do carefully read your slides, your presentation that I given to you, I won't be received like these questions. Liability, the loans, credits, the companies, the businesses. Please always repeat the presentation that I have given to you on the sessions. The company's loans, credits, and accounts payable. Just means that, just a moment. So, again, this liability is company's loans, company's credits, and the accounts payable. What is the accounts payable? That means that the company must pay money for someone. Like if they bought some products, they bought some products, and they haven't paid money yet, and they should pay in the future. This is means like company has a liability, must pay to customer, to any contractor or manufacturer, to supplier, like for example, to pay someone or to supplier. So I have I have a question. So if we receive the cash, our account should be credit, or what we learn from the banks? So this is, I couldn't understand your questions, Mr. Navid. When we receive the cash, we also must think what is kind of cash. Is this revenue, like from our business services revenue, we put on the credit side. If like a cash, like we have some suppliers, and they bought some products from us and haven't paid it yet, and we put on the debit side. So always think about the meanings of the transactions. So, any questions so far related to the trial balance? Because you really must do understand what is the trial balance and how to work based on trial balance. Because if you do not understand, we cannot move away. I mean, we cannot move on the next session, on the next chapters, because that is important. So any questions so far? Sometimes I can miss your questions. You can repeat me again. So if no any, my question, Mr. Barak says, where is the 200 business premises? Just a moment. Business premises for 200? No, it's a once, Mr. Barak. So look at here, just a moment. You are asking where is the 200 business premise? Is it not 200? I'm going to show you. The business premises here is, oh sorry, this one is RM 1200. RM means Malaysian ringgit 1200, not just a 200, 1200. And I have put it, you see, as a rental expense on the debit side. Here is. Here is rental expense 1200, Mr. Barak. Okay. So please explain the transaction February 28. Utility expenses. Okay, again, going to explain to you again. Utility expenses. Here is. So this is paid telephone bills and electricity bills. And we have two kinds of expenses, which is made for Edlin House. Just a moment. You see? Edlin House, and which is made for the business. And now, please think. Why? First, what kind of amount we must take on our trial balance, and what we should not take. We won't take in our trial balance. Of course, you see, the expenses like made for business, we must take on our trial balance. This one that I'm showing you with a green pencil. That we made for business. But Edlin House, we are not going to take this amount on our trial balance. because this is the Edlin's personal expenses. Like his personal expense means he has a family, he has own budget, and it always will be separate from the business budget. We are not taking this amount on our trial balance. It will be missed, of course, missed. And why is given to you as example here is just especially for you to encourage you to think about what is a family budget and what is a business budget, to remind you the accounting principles, the main principles, which is the first is business entity. You remember business entity principles means we always do separate, we have a separate accounts in the family and the business one. The business accounts and budgets will be separate from the family accounts and budget. And this is as expenses. Here is, I put on the credit side. Why? Actually, it should be on the debit side as expense. Why I put on the credit side? Because these expenses, you see, is just a moment. Because all the payments have been made using money from his savings, means all expenses are made from the Edlin's money, from the shareholders' savings. From the Edlin's pockets. I don't know how to explain more clearly. So, and the money taken not from the business, money taken from the Edlin's personal budget. And here is, that means on trial balance we put on the credit side because this is our liabilities. Because these expenses already paid, but not from the business accounts, paid from the shareholders' personal accounts, and we have to back this money to Edlin's what they say, his own personal accounts. We must pay back to him, and we put like credit, like our liabilities has increased. Okay. So I have some questions. I'm going to read them. Here is just a moment, but just a moment. Mr. Elias wants to speak. Okay, Mr. Elias. Yes, I'm going to active your microphone, Mr. Elias, if you would like to speak. Just a moment. First, I must to find you on the list. Okay, I can see your hand. Opa, just a moment. Yeah, Mr. Elias.
Hello, good evening. Can you hear me, madam?
Yes, good evening, Mr. Elias. I can hear you. Please, you want to share with us something?
Yes. Thank you very much. These are very interesting lessons and very important basic information about the accounting that we should know. And because it's very interesting, we want to understand it better and better. Mm-hmm. So if you don't mind, I have a few questions.
Yes, right. Okay.
Because it is difficult sometimes for the questions on like chatting, we do not understand what we're really asking or something.
Okay.
First of all, if you don't mind, because in this chatting box, the participants are not activated between each other in the class. If you could activate the chatting box, because some of the students may be asking repeated questions from you. If somebody asks one question, maybe others can see it also, and they do not ask repeated questions. We cannot see each other's question on the chatting box.
Oh yes, okay. This is I didn't know. Just a moment, because I have to find where I can do this. Make present.
Yes.
Because on the last HRM class we have
And the
I think
participants, if it will
yeah.
activate participants, it will be good.
Just a moment. Okay, just a moment. I ask the BBS administration how to do it. Any questions? You
Yes.
can continue.
Yeah. My question is regarding some transactions, like for example, transaction February 5.
Okay.
This is accounts receivable. In the explanation in the first table, it states that it is an amount cash from customer for payment on accounts receivable.
Yes,
It
right.
means that the customer paid for the company, right?
Yes, we received the cash, like accounts receivable. That means the customer paid the amount that he must pay, and he already paid it to us in
And
cash.
when money comes, when revenue is increased and for the company, it should not come for the credit. Why it is shown under the debit? Because when customer pays, it means that the company receives more money actually.
So here is, as you remember, the cash is our assets, right? And when we receive the cash, when the cash will be increased, we show always on the debit side. And accounts receivable, when we also haven't received accounts receivable, we also show it in the debit side.
But February 18, under February 18, we received cash for services 580, but it is under credit. But
Yes.
February 5 under debit. What is the difference, please?
Yes, because this is our service revenue. Is shown. Let's see on the transaction. February 18. The received cash for service provided for 580. That means, of course, we receive the cash. You think that we should put on the debit side, as we do with the accounts receivable, right?
Yes.
But this is a cash received from the businesses, that business we do, like revenue. It's a revenue, and always as revenue, if it's cash or not cash, we show on the credit side. You must remember, if we do receive the revenue from our services, from our sales, for example, we always show on the credit side.
So February number 5 is not a revenue?
This is not revenue, this is accounts receivable that someone must pay to us, but we don't know for what they must pay. Maybe they must pay for, if it's sales, of course, we show on the credit side, but maybe it's not the sales, the accounts receivable. Maybe it's another reasons. We don't know for what they paid for accounts receivable. Yes, right?
So if
here is, you see the received cash from the customer for payment on accounts receivable. That means the customer paid, but for what actually? For what kind of transaction he paid? We don't know. And as accounts receivable, as a cash that has increasing company, we put on the debit side. We show on the debit side. Remember, in the double entry, you see, just going to show you the slide, the accounts receivable here is also shown as the debit side, in the debit side. Maybe it's also already paid in the cash, we don't know, but we also put it on the debit side. When you see words accounts receivable, that means you should put on the debit side. So do you understand, Mr. Elias? Or you have any suggestion?
Yeah, please don't mind, but to be honest, not very clear on this, because we take it as cash received. When cash is received, it means that the company money is increased. Why it's not under the credit? Why it's under the debit? For example, if you pay a customer this amount, 2,740, we put it under debit, that we can understand. But when we receive money from a customer, why we put received money under the debit, it is not clear for us.
Okay, I'm just going to show you another example. Just a moment. I have some examples, I think so. Just a moment. This is the answer how given in the books, you know. And logically, you are right. Like this is the money we received from our customer, means like our revenue has increased, right?
Yes.
We should put on the credit side. Let's see. We have some quick review questions. You see, here is cash in hand. So we have a cash in hand, drawings. What else? No, we have no any. We have no any accounts receivable here. Is I can't see that. Actually, I have to say that I am also I have been confused with this transaction February 5. Why they put on the debit side? That it's like seems like a revenue, right? Should be on the credit side.
Yes.
But this given in the book, I think sometimes they can have been mistaken. I think so. Maybe they mistaken. If they do mistaken, we can change because we are not going to always believe what given the answers in the book, because we must think with our mind, right?
Yes.
So let's change and let's see what kind of balance we will have. Let's change the cash accounts receivable. Let's change on the credit side.
But I have also another question before that.
Yes. Yes.
I want to understand the difference between transaction February 1 and transaction February 9.
February. Okay.
February 1, when we say purchase office supply.
Yes.
By cash. Yes. It is under the debit.
Yes, right. Like expenses, we purchase, we given money to somebody. Like seems like expenses, it increased. When expenses has increased, we put on the debit side.
Yeah, but when we say under number 9, purchase office equipment, valued this one.
Okay. This right.
Why?
Okay, going to explain you. Like office equipment should be also like expenses, right? Because we have bought it some equipment and seems like should be like expenses and put it on the debit side. But you remember these expenses has been purchased on the credit, right? That okay, we have some the equipment in the office already, for example, but the money we are not we take it on the credit side, or we taking the equipment on the credit based on the credit, right? That means we're taking a credit, our liabilities will increase. We're taking credit from the bank, for example.
So it means we did not pay by cash.
Yes, right. We are not taking a money 4,000 and paid to supply. We haven't paid it yet.
Okay. Now
we purchase on credit. That means we must pay in the future. That means we will pay. We are not paying. Our money still in our accounts. And like its liabilities, our credits, we put on the credit side. It has increased. Okay?
Okay. Thank you very much, Mark. Yeah.
Okay, thanks.
We're finished. If you could please activate the participants in the chat box, that will be
Yes,
Right.
so just one, uh, we'll solve these problems. So, and as Mr. Elias said, we have about the transaction number February 5. Just a moment. Okay. Transaction February 5. Let's change it, and put on the credit side. Okay, going to change it first. So I'm going to change first in my file. So the the accounts receivable that like seems like we received the revenue. Our revenue has increased. We put on the credit side. So I'm going to change it and we'll show you with the changes already. And you save the answers. You must remember that sometimes we have some mistakes in the books, like it could be like the errors or mistakes with the numbers, with the figures, or with the words. And we always must to check ourselves the correct answers, right? Not always be agree with the answers in the books or in the presentation or so on. Just a moment. Or physically. And some also the transaction given to you with some errors or mistakes, or like to confuse you to think more about the accounting and do your correct answers. Just a moment. Here is going to change something and give you again. Just be patient, please. So be patient, please. Okay, that I finished. I'm going to share with you with the new answers. And some of you, all of you cannot see the charts others, right? Just a moment. These things. Oh, okay, I have something. Oh. Mr. Bark says we won't change it. We are not going to change it. Must be as we did. Sorry, I haven't. Yes, do not change. Right, Mr. Barak. if you do explain why, it will be pleasure from you, please, Mr. Barak. Mr. Barak, hello, can you hear me? Hello, Mr. Barak. If somebody can hear me. Hello. Hello, Mr. Barak. Yes. Miss. Okay. Yes. I just wanna give microphone to Mr. Barak because he wants to share with us with some important information why we won't change the amounts. Hello.
Hello.
Hello, Mr. Barak.
Yeah.
Yes, good evening. You just have chat us that the answer is right. Do not change, it's right. So why do you think that is right? We are talking about February 5 transaction.
Yeah, you know that there are always some laws that we have in for the transactions. For example, that for assets, we increase of asset is debit and decrease of asset is credit, and for the capital and liabilities, we have the increase is credit and decrease is debit. That we are putting it in the rights, increase and capital and liability, we are putting it in the right side, and for the decrease we putting it in the left side. So these are the laws, so that we cannot change it. And for the account receivable, always it will be put in the left side, in debit side, and for payable it will be put in the
Right side.
credit side or right side.
Okay.
It's yeah. These are the laws that we cannot change it. Just there are something that we should remember it, and that there are something that we can think on it. For example, that in 75 and 42, that was from the Edlands own money for his own expenses, that it was put it for our confusions, but in general law it's not changeable. So we should remember something, that it has a law that just I wanted to say this one, because I saw several balance sheets and trail sheets, that in all these sheets I found that the account receivable is on debit side and account payable is on.
Yes, me also. I have seen, but they confuse us with the word that they receive the cash from customers, and that the subsidy thing that is like revenue that we received and we should put on the credit side.
Yeah, but it's clear that you see that this is that received RM 2,740 cash from customer for payment of account receivable. It means that still we don't have this money, but we will receive it in the next future. And other in 15 February, if you see that made payment account payable for RM 1,200. So
Yes.
we have to pay this, but still we didn't pay it.
Yeah,
So
because it's accounts payable, right?
yeah, it's payable. So payable, we should put it in our balance sheet or trail sheet on right side as a credit, and account receivable should be on left side as a debit.
Okay. So what do you think for other transactions? Those right one?
For which one?
For the rest of other transactions.
The rest is, I think it's okay. So let's. I think for most of the students, it's the new thing. I think you should give more assignments and also more examples of balance sheets or and trade sheets to see and to remember it, because from one example it's very difficult to remember it or judge it or to be confident. One sheet it doesn't give the students the confidence to if they see more transactions and more balance sheet and simply balance sheet where we show that these are the assets, these are the liabilities, and these are the owner equity or capital, so they can remember that which item came under debit and which item came under the credit.
Okay, thanks. So thank you, Mr. Barak, for sharing with your minds with us. Thanks a lot. So going to mute your microphone, okay? Thanks.
Okay.
And thank you. So as Mr. Barak says, if you do know someone, he is actually accountant and he has the accounting background. So, and I already rechanged my answers because before it was correct. So if you can see, it's still same as first time our trial balance, and the books won't be mistaken that just we have confused with the Mr. Elias. So just remember that when we have accounts receivable, we always put on the debit side. It doesn't matter we have received or not cash or not by cash, by bank or transfer and so on. Always accounts receivable as a rule we put on the debit side. And the accounts payable we always put on the credit side. Our accounts payable that we must pay to someone. So you must remember these two things, these rules. And for others also. So first rule, the accounts receivable we put on the debit side when it increase, and the accounts payable we put on the credit side. The second rule. The third rule about the always when we have expenses we put on the debit side. But when is that expenses made by credit or made from not the business accounts, we put on the credit side, because our liabilities will be increased, like in the examples utility expenses here is. And the rule number 4, the Edlin's house, like we have a example like Edlin's house expenses, always will be separated from the business expenses. We won't put on the trial balance. And sometimes you won't take some equal between the credit and the debit side, and you must take a balance, carry down. That means take a higher account, deduct from the lower account, and will down the balance for some amount. And that then you will get the equal between the debit and credit side. Of course, the the other amount which has been carried down will be taken on the next month. So actually, I will be giving you another assignments based on the trial balance, so then you can decide, can solve them and give me answers. We can do it. I think we do some more practical exercises based on the trial balance, right? So we the time is limited, right? So I have some questions. Just a moment. Okay, because I have some books. I have some books, and I'm going to select the exercises based on trial balance. What is actually assets, what is liabilities, and so on, and we'll resend you again a new homework, and we'll email to you. You just email me your who didn't receive any information from me. Just email to my address, and to all of you I give a new kind of homework based on the trial balance. And we have a half hour to finish our class. So let's do the theory chapter, chapter number 2. We have a chapter number 2 based on the finance, which is measure and report and financial position. So let's see what we have. So the topic and the structure of the lesson. What is a balance sheet? Effect of trading on the balance sheet, the classification of assets and claims, balance sheet formats, the balance sheet as a position at the point in time, and interpreting balance sheet, right? So the key terms you must be able to use: the balance sheet, assets, claims, tangible assets, capital, liabilities, what is the fixed assets, current assets, what's the long-term liabilities, the current liabilities, and accounting conventions. So what is actually the balance sheet? Before we have looked on the trial balance, right? Now we are going to see what is a balance sheet. Balance sheet sets out the assets of the business on the one hand and the claims against those assets on the other hand. The assets are a source of the business that have certain characteristics such as the ability to provide the future benefits. So you must remember, the assets, it's the company's resources, the business resources, that they has special ability to provide the future benefits like revenues. Let's see the next one. The claims, what is the claims? It's obligations on the part of the business to provide the cash or some other benefit to outside parties. So you must remember our obligations, our liabilities, it's like our claims that we must provide to somebody to pay for someone. And that we have two kinds of claims: capital and liabilities. Capital, this is the investment money from the shareholders, and the liabilities that the companies like credit loans that company must pay to someone. So we have some classification of assets. The assets are normally categorized as being fixed. We have a fixed assets, which is held for use within the business on a continuing basis. And the fixed assets is assets like a land, like a property, like all the equipment which will be used more than 1 year. And we have a current assets, that the assets that are not held on the continuing basis and include the cash items that expected to be converted into cash. So current assets is like a cash, like accounts receivable, all the current assets all the supplies, equipment which is used less than the 1 year. So we have also in the liabilities we have two kind of identification of the liability, which is the long-term and current liabilities. Long-term liabilities represent those amounts not due for repayment within 12 months. Long-term liabilities, it's example like when we take some credits in the bank, which is we take a credit for more than 1 year, for 2, 5, 10, and so on. And the current liabilities represent the amounts due for prepayment within 12 months. That the payments we must pay during the 1 year. This is the current liabilities. So we have in the balance sheet we have two kind of formats, which is first horizontal format and the second vertical format. Here is given the accounting conventions. Do you remember we on the first session we already studied about the accounting conventions, about the principles actually. What is a business entity, money measurements, historic cost, going concern, and so on. And so that's all. This is chapter 2. In the chapter 2, in the finance, we just have a learning about the long-term liabilities, current liabilities, what is the fixed assets and what is the current assets, and what is balance sheet itself. Any questions so far for this short presentation? So balance sheet given with the two sides. One side will show our assets, assets like we have a long-term assets and current assets, our cash and so on. And the other hand, the right side will show us our liabilities and our capital, our passive side, like say. So any examples? As I given to you examples. So fixed assets, when we have the things which is we will continue with the business. Like we have a property, for example, the buildings. We have a buildings. These kind of things will be always with the business. When we have some stocks, property, lands. What else we have? When we have a car, for example, the car, the equipment, like equipment which is using the more than 1 year, and the current assets. This is all items. Actually, it is itself cash in hand, cash in bank, and all items which can be converted to the cash very fast. That we can sell this kind of items that could be converting the cash very fast. And what else? Long-term liabilities, the loans like credits, which is taken more for more than 1 year. 12 months means more than 1 year, and the current liabilities, which our liabilities, our client that we must pay during the 1 year. Before the year will be end. Okay. Yes, machinery, land building are fixed assets, right? Mr. Barak says right things. This is I should make the chart to be able to others, but I'm so sorry because I have to ask the vice administrator how to do it. So Mr. Barak says that the fixed assets is loans, is a machinery, land, buildings, properties. and which is the current assets is the cash, actually cash in hand, cash in bank, and all items which can be converted very quickly into cash, like accounts receivable. Mr. Elias asking, what is the capital? Actually, capital, this is invested money. So capital, this is money invested by the shareholders. Money invested to the business by shareholders. The capital is the money invested to the business by the shareholders, right? So, and I have let's move on the next presentation. We have a presentation. Just a moment. The preparation, the balance sheet. Just a moment. Going to the preparation of final accounts and the balance sheet. And this presentation related exactly to accounting skills based on the balance sheet. And here is we are going to look in details. What is income statement? What is the balance sheet? And at the end of the service, you should be able to understand the income statement, balance sheet, the prepared income statement, and balance sheet. So, and the introduction. Let's see. Income statements for trading firms contain 3 items which are not found on the income statement for service firms, for service companies. So you must remember, the trading companies and the service companies, they have like a different income statement items. So here is income statement for trading firms contain 3 things: the sales revenue from trading goods, and cost of goods sold, and the gross profit. And these 3 transactions we are not going to find in the statements of the service companies. You must remember these rules. So here is given some sample of the income statement with some transaction, that amount not given. Just example to show you how the income statement looks like. So here is the learning objectives of the balance sheet. We will classify assets and liabilities into acceptable categories. We create a statement of retained earnings as a supplementary statement to the balance sheet. And we will distinguish between the account and the report format in the prepared balance sheet. So by today's session, we must be able to prepare the balance sheet. So what is the balance sheet? Okay, we have some outline. We will look at the balance sheet format. We classify the balance sheet. We will look at the assets, liabilities, shareholders' equity, and statement of retained earnings. So balance sheet is a basic financial statement. It reports the financial status of company at a point in time. It includes, what includes actually? Assets, liabilities, and shareholders' equity accounts, which means shareholders' equity accounts means capital. And the classified balance sheet provides users useful information concerning the firm's financial position of the company. So the balance sheet shows the company's financial positions at the present time. So balance sheet format is account format with the 2 parts which present side by side. And we have a report format also. The 2 sides are presented one on the other. So you remember before we looked at that balance sheet has 2 kinds of formats, which first is the horizontal formats and the vertical formats. And account format, the two parts are present side by side. This is a horizontal format. And the report format, which is two sides present one under one, one under another one, is a vertical format. So you won't be confused when you see the two kinds of formats of the balance sheet. So look, we are classifying the balance sheet. So as I told you, the balance sheet will include assets, liabilities, and the shareholders' equity. What is assets? Here is assets is the current assets, is the property and equipment, and other assets. And liabilities is the current liabilities that we must, like accounts payable. It's a long-term liabilities, like credits taken for for example, for 5 years, and other one. So now we are looking in details of what is the current asset, what is the current liability, and so on. Look at details, the meanings of these statements. The cash and other items that can be converted into cash or consumed by the business within 1 year from the balance sheet date, such as the current assets, means it's a cash, it's marketable securities, it's accounts receivable, it's inventories, it's prepaid expenses. This is the current assets. Here is given example. Hospitality sample firm, the balance sheet December 31, 2007. So given assets, current assets like a cash, you see, they're like a marketable securities, accounts receivables, inventories, prepaid expense, and total amount with 9,360 US. And now we are looking at assets used in operations to produce revenues, which is our property and equipment, which is the land, the buildings. This is our long-term liabilities, liabilities in our capital. No, sorry, this is a fixed assets. Oh, sorry, I confused. The fixed assets, which is land, buildings, the furniture, fixtures, and equipment. And here is total property equipment given amount, less accumulated depreciation. We won't be forget about the depreciation. And here is given the net property and equipment. This is the fixed assets. So let's back. Here is given the examples of the current assets, right? This is current assets. You must remember what we include in the current assets. We include the cash, the marketable securities, accounts receivables, inventories, and some expenses. And this is the fixed assets. In the fixed assets, we include the lands, buildings, the properties, means the furniture, fixtures, equipment, and will be in totaling, and we will deduct our depreciation, and will be taken the net property. This is the fixed assets. Yes, this is the rules, like laws. You must remember. You must take in your mind always what we include in the current assets and what we include in the fixed assets, because based on this session we do some exercises, and you must remember these things. Yes, we will deduct the depreciation each year. I have a question that we must deduct the depreciation each year. Yes, we must deduct the depreciation each year. So then we will see the net amount of the property and equipment, right? Let's see the next one. the other assets. We have other assets, items with a future value which are not used in operations. What kind of actually assets we are not using in operation? It's like intangible assets, like goodwill, like trademarks, like patents, property expenses, like license. The long-term investments, also investment in subsidiaries and restricted cash. Long-term receivables also, and also like a cash surrender value of officers' life insurance, like life insurance. So this is other assets which are not used in the operations, like intangible, like long-term investments, long-term receivables, and cash surrender value of officers' life insurance. Life insurance expenses. We also is put like in operations. So goodwill. Some asking what is goodwill? Is like goodwill is itself actually is like trademarks. Goodwill the synonym for trademarks. Patents, like patents for some product. For example, the McDonald's has a trademark McDonald's. This is a goodwill. Like Starbucks, also this is the marks like Starbucks, like a goodwill. So let's see the next liabilities, current liabilities. We have current liabilities due within 1 year from the balance sheet date. That liability we must pay during the 1 month. It's accounts payable, it's accrued expense, interest, salaries, it's current portion of long-term debts, the notes payable, income tax payable. So taxes, salaries, accounts payable, all are current liabilities. You must remember. The next things, current liabilities. Okay, here is given examples. The current portion of long-term debts that we paid during 1 year. The account payable that we must pay during 1 year, during the 1 year. Income tax payable. Taxes, always taxes we pay one time in year, right? Some countries pay in a quarter, in 3 months. Accrued expenses. So this is given examples of the current liabilities. So let's see, we have a long-term liability due after 1 year from balance sheet date. Long-term liability, that liability we must pay in the future. We taken time more than 1 year to make a payment. This is like mortgage payable, like bonds payable, like notes payable. Shareholders' equity. So we have 3 kinds of shareholders' equity: the preference shares, the ordinary shares, and retained earnings. So let's see each other one. The ordinary shares, let's see the difference between the ordinary shares and preference shares. The ordinary share is ownership. He has ownership in a company. He has a voting rights. The shareholder has voting rights. Has a potential dividends. Last to receive in the event of bankruptcy of the company. And the preference share. The preferred shareholders have preferences on earnings and upon the liquidation, but have no voting rights and present the dividend rates. Here is the difference between the ordinary shares and preference shares. You must remember that always the shareholders which have a preference shares, he has no voting rights in the company, but he has a right to get the dividends before the liquidation. And also his dividend rate remains at stable. But ordinary shares has as I told you, has the voting rights in the company. The potential has a dividend. The dividends could be increased. They could be increased or decreased actually, and also they receive the money in the last time when the bankruptcy has happened. Actually, dividends. What is a dividend? Dividend. This is the commission that you earn from the investment. Dividends. Just a moment. Typing you. Commission received from the investment, like your benefits. Or sorry, investment. The dividend, the commission received from the investment. You must remember. So our class is going to be in the 5 minutes. Let's see. Okay. This kind of the presentation going to end. Let's end it. The retained earnings. We have accumulated net income that has not been distributed in the form of dividends. What is retained earnings actually? The separate statement of retained earnings indicates change in retained earnings balance since previous period due to exclusions of net income and dividends paid out, if anything. And shareholders' equity. You remember we have a preference shares, additional paid in capital, retained earnings, all shows us the company's equity. And we have some quick review questions. Okay, let's back on the quick review question. From the following trial balance of B. Morse draw up on conclusion of his first year in the business. Draw up an income statement for the year ended 31 December, and so on. The trial balance, you must draw up the income statement for this trial balance. But first, of course, you can't do it because most of you can't do it, because most of you must understand what is trial balance first. And you won't do this quick review question. We do on the next session, because today we'll send you the homework based on trial balance, because we must understand clearly what is the trial balance, what is assets, liabilities, what is capital. Is it okay for you? So this is a homework that we have solved. You can save it. I will send you by email actually. I will send you by email. So with the correct answers. And we'll send you a new kind of assignments based on trial balance. Is it okay? Any questions so far? Now we have some important things, students. First, you must understand and you must remind and take in the rules what is assets, what we include in the assets, what is liabilities, what we include in the liabilities, what is the capital, what we include in the capital, what is a trial balance, how to prepare the trial balance, what is the balance sheet and how to prepare balance sheet. First, we must understand these things, and then we can move away. We can move for in the future. I mean, do other things, because in the future we have some session which is very, very hard to understand if you do not know what is trial balance, balance sheet, and income statement. These three main things three main formats you must be able to understand. As I told you, income statement, balance sheet, and trial balance. Yes, and I will send you the presentation, today's presentations, and the homework also. Okay, and one important thing, who did not understand the homework that we did, who didn't understand, or who cannot understand some things in the trial balance, some transactions, just write me, just email me, because don't be how to say, don't be ashamed about this, because I know this is hard to understand if you are not accountant, if you have no any account the background in the accounting. Email me your questions. If it seems like a simple, also email me your questions, and I will give you the answers in details on the based on the examples. Because I have seen 16 attendees today, but not all of you are active in the class. And the last time I received the homework from the 5 students only. And this is bad, because most of you must send me your homeworks. That means that means you are able to understand the homework, and you have some encouragement to do your finance class. Okay, so that's all what I want to say for you. Our class is going to be end. It's already 8 o'clock by Kabul time, right? So thanks for you for your participation. Thank you to Mr. Barak, Mr. Riyad, that given some answers and questions. So let's see you on the next session. Next session we will actually next session we have to study next session the new chapter, but we won't study new chapter because we do some exercises based on trial balance and based on the income statement and balance sheet. Is it okay for you if we do the next session practical session, practical exercise, right? That would be great. I mean, you could understand better and better the accounts, the finance itself. Yeah, so we'll do the next session practical exercises. So that's great. Yeah, that's great. Thanks a lot for you. Thank you and goodbye. Wait, and we'll send you email. Don't worry. Yeah, we do the practical things. I give you more exercise. So thanks. Thank you. Goodbye. I'm going to stop my recording.